a couple of quick things. I think first off, you've had that wake up to the market as far as what China's strategy is, as far as releasing their state supplies and their reserves to the market. First time they've done it since 2005 for copper, 2010 for zinc and aluminium. We put our minds back to when they released that pork in the last couple of decades due to issues they were having as far as supply. So this is just an ongoing saga as far as China's concerned, as to rein in inflation or the inflationary spike as far as prices.
All right. Well, hi, Peter. Just wanted to understand that their intent is obviously pretty clear. They do not like the inflation that's being witnessed in commodities and in metal prices. But do you think that China continues to hold the kind of power that it did on commodities, or do you think now we have Biden's plan and we have the whole global economies gearing in infra spending mode, which will overshadow any action by China?
Well, I think overall it will overshadow, and there's no doubting that, because of the demand and in the sense of stimulus that's been added to the market. And I feel as though that this decade is going to be a very strong one for commodity consumption. The second part is, I think that China's probably realising that it was able to buy metals at very, very reduced prices over the last year or two. And in turn, they've been able to hold those strategic reserves, release to market when prices were hot, and try and pull back the price, with copper down 8% really in the last month. So let's see what happens over the next couple of months. It could be an interesting, is the tail wagging the dog or the other way around? But I think it's going to be a fascinating time, bit of deal tension to the commodity markets, and I'm not here to say whether China's going to be playing the trump card, or they're not going to end up with the results that they were trying to achieve. But at the present time, they're in control, and let's just see what happens over the next matter of months.
Right. Peter, I just wanted to understand, if commodities are coming down, or markets are signaling that US 10-year yields have come down by 20-30 basis points, commodities have started to come down. Does that mean that markets are telling us that the global growth may not be as strong as what it was expected earlier in the rebound?
Well, the only markets coming back are really, we're looking at those base metals, and they've had a bit of a correction to the downside, and copper's really taken the lead. But let's put our minds across to where crude oil is, and we're nearly at $75 a barrel for Brent. You're over $72 a barrel for WTI. So we're at the strongest prices that we've had in a number of years. So they're very bullish. And that's a far bigger market than the global base metal market. So the other side is, I think that at the present, inflation is the storyline. Whilst China takes this action, it's maybe just a point in time they've been able to take advantage of their cheap pricing in the market that they bought those commodities. But I do believe that the prices will increase from where we are at the moment over the next matter of years.
Right. When we talk about the cheap money, one day it's going to end. Do you think markets know that, or markets are right now not factoring in anything of that front?
Well, the markets certainly know it, and that's the realisation as far as the taper coming back or pulling the taper off the table. The next part is, of course, with inflation. Have a look what the May numbers coming out last week were in the United States. So when you've got inflation running at 5 or 6% in the States, year-on-year growth, then there's really a major impact there that's going to wash through the markets over the next year or two, which has to be a rising interest rate environment, and in turn to try and contain inflation. So like it or not, I feel as though the dollar will continue to probably have a lift up from when that's introduced, probably in 2022, a stronger US dollar. As far as other markets are concerned, I think volatility will be the next game on the table. Where does the equity prices trade, and what happens to global commodities as well as interest rates?